Hi everybody, my name's Angus Halkett and I thought I'd start putting together some videos of my thoughts and markets and in the future I will put together some pictures and whatever else to talk about things, but this is just a bit of a trial run at the moment to see how it goes. It's very much just experimental for me. Anyway, this week it's the end of August. That means that it's the Jackson Hole Symposium in the Rockies in America, and we will be hearing from various central bankers over the course of the 3 days, including Jerome Powell, Fed chair, on Friday the 25th, and that'll be pretty interesting considering what's happened to global bond markets over the course of the summer. We've seen significant bear steepening of the curve, which is kind of weird and not what you really expect at this point in the cycle. The Fed's coming to the end of hikes. Normally that happens in a environment of decreasing volatility, flat curve. Nothing really happens to the long end. The front end kind of jumps around a bit as you try to price or not price what may or may not happen in the very short term. So what's happening is pretty bizarre. We've got new highs in 10-year and 30-year yields. Coming into Jackson Hole is kind of interesting to see what he's going to say. And of course, you had the Wall Street Journal article from Nick Timmerhouse talking about them tweaking their measure of neutral interest rates and R squared and blah, blah, blah. And maybe they do, but of course, that has few practical implications for monetary policy in the short term and kind of really for markets as well. Of course, it's got nothing really to do with inflation, because if you look at inflation-linked bonds, inflation break-evens are basically unchanged. They've been around like 2.2, 2.3% for some time, not really changing. The thing that's changing is that real yields are going up, which is a incremental tightening of monetary conditions in the US economy, and it'd be interesting to see whether the Fed like that or don't. If they don't, it's not obvious what they can do about it in the near term. We've already had Fed people talking about the possibility of rate cuts next year as inflation comes down, and if he just reiterates that, then that's basically just where things are. So if they really don't want this to happen, then they're going to have to say something or be an awful lot more strident about it. The alternative, of course, is if they're happy with that happening. And that means, I would imagine, that the stability of the front end of the curve, because what's really happened is the curve steepened because the front end has gone absolutely nowhere, pretty much. Front end of the curve is going to start moving, and that'll be interesting because, of course, then we get back to the old tightening cycle situation of flattening curve, long end outperforming, and that would be something I'm a lot more comfortable with and a lot happier talking about. So, bear steepeners are not normal. They do happen. Generally, they happen when bad things are happening, and maybe bad things are happening now. We don't know. But the market seems to be taking it all mostly in its stride at the moment. So it'll be just very interesting to see what the Fed say at the end of this week. There is some possibility that, I would guess that, or have a feeling that the curve probably should reflatten. But of course, if Powell, as I said, comes out and just reiterates a more dovish view about the possibility of rate cuts next year, then that's no change, and we just continue, and the pain continues for the long end of the curve, and then we roll on to the September Fed meeting to see if they're going to do anything about it. It's pretty clear they're not going to stop doing QT. Not that QT really means a great deal for the long end of the curve anyway, because the stuff that's rolling off is at the front end. They're not exactly selling stuff and adding duration to the market. The government's doing enough of that anyway. So we'll see where we go. I would be pretty cautious in most things. Most of what I look at is pretty meh at the moment in terms of indicators, and I'll go into this in some detail some other time. But I mean, it's hard to beat the drum about anything. I mean, basically, the dollar's rallied, but the dollar doesn't feel overbought in any way. Of course, people are catastrophically concerned about China, which is probably less of a short-term thing and more of a longer-term issue for them. So that's probably slightly wrong. And then bonds just continue to sell off. And if you look at those, it still kind of feels like people are long bonds. And the strange thing is, of course, is the outperformance of the front end of the curve, where people are, of course, also long risk, but it refuses to sell off. So I guess we're going to find out how real that is, if Powell says anything unexpected, and then the market will take that down. As for stocks, it's not really my main area. They appear to be the only thing that kind of is reacting to the uncertainty at the moment, with VIX going up and stocks going down a bit, and of course, people are still huffing the fumes about AI and all that kind of stuff. So, I mean, we'll see there, but I'd imagine, they are probably the least interesting thing, unless of course, Nvidia come along and say something nice and everyone wants to buy stocks again, which is quite possible. So I'm watching bonds, and I will talk about this more soon. Thanks very much for listening.